Even though the latest economic data aroused steady risk aversion, Wall Street is not going to give up, searching for new catalysts for optimism. The market will hardly find them on a Monday, but something may improve sentiment later this week. The benchmark stock indexes closed mixed on Friday. The S&P500 and the Nasdaq closed with losses for 2 weeks in a row. Keep track of all market developments on the InstaForex TV channel. Your feedback is highly appreciated. See you online tomorrow. The Dow Jones climbed by 105 points or 0.3%. The Nasdaq showed the weakest performance and closed 0.56% down. The S&P 500 shed 4 points or 0.11% to close at 4,464 points. The major stock indexes traded on a pessimistic note in the pre-market on Monday, suggesting another gloomy session. Futures on the stock indexes lost 0.10 and 0.15%, and the S&P 500 is expected to trade in the intraday corridor between 4,420 and 4,480 points. The top stock indexes closed with the week with mixed results. The Dow Jones grew by 0.6% last week. The Nasdaq and the S&P 500 lost 1.9% and 0.3% respectively. The culprit of the fall on a Friday was the report on the US factory inflation released on a Friday. The data propelled growth in the US treasuries and affected the high-tech stocks sensitive to interest rates. The US PPI increased by 0.8% in July from a year ago, following a 0.2% growth in the previous months. Producer prices rose amid growing service prices. The reading beat the consensus and assured analysts to revise inflationary pressure. Traders expect the Federal Reserve to refrain from a more monetary tightening by the year end. The chance of a rate hike in September fell to 88.5% from 90% before the PPI report. Yields of 2-year treasuries, which move in line with the expectations of short-term interest rates, rose to 4.88%. This dynamic affected high-tech giants, and the shares of Tesla, Meta, and Microsoft closed on Friday 0.6% and 1.3% down. A 3.6% drop in Nvidia shares sent the semiconductor index down 2.3%, a 5% weekly decline in its worst performance since early April. Healthcare and energy stocks rose among the S&P's major sectors. Growth in the energy sector by 1.6% was supported by rising oil prices in the light of a forecast by the International Energy Agency of limited supplies. Accidental petroleum was among the top gainers, climbing by 3.3% after one of its divisions received a grant from the US government to support its carbon capture ambitions. US-listed Chinese stocks Alibaba and JD.com tumbled by 3.5% and 5.3% respectively, as Beijing's latest stimulus package disappointed investors and fresh data showed that China's post-pandemic recovery is on the wane. On a Monday, futures for the US stock indexes tried to stabilize, but they again moved into the red zone before the opening bell. This dynamic was caused by another increase in the yield of Treasury bonds, which again hurt American high-tech giants. Microsoft, Meta, and Apple lost 0.16% and 0.5% in the pre-market. Tesla shares plunged even sharper by 3.2%, and their price dropped again after the news that the electric car maker cut prices in China on some versions of the Model Y. The macroeconomic calendar is empty today, and investors prefer a wait-and-see approach in anticipation of more news. In particular, in the corporate sector, we are talking about important quarterly reports of major US retailers, Walmart and Target. The results of these companies often trigger strong market reactions as they reflect broad consumer sentiment. According to Refinitiv, IP's 91% of S&P500 companies reported second quarter results and 78.7% reported earnings that surpassed analysts' expectations. Overall, companies have reported earnings 7.7% above expectations, compared to a long-term average of 4.1%. Consumers will also be in focus on the economic calendar. Traders are anticipating the report on retail sales on Tuesday. Retail sales for June, released last month, rose less than expected, and still they showed that consumers tolerated higher interest rates. A similar result tomorrow could indicate a so-called soft landing with a slower inflation and robust economic growth. In addition, the Fed's minutes, which will be released on Wednesday, could shed more light on the policymakers' point of view expressed at the meeting in July, in which the central bank raised interest rates and left the door open for another hike in September. The picture will be complemented by data on employment and manufacturing activity. While the stock market is in suspense ahead of the new clues, the currency market is opening with a buzz. The US dollar is taking the lead in the early hours of the New York session. Its index leapt by 0.5% to 103.40. It's likely to trade in the intraday corridor between 102.90 and 103.70. The US dollar index is extending its advance because accelerating factory inflation in the US pushed Treasury yields up. Amid the empty economic calendar, the currency market is focused on the current fundamentals and the collapse in the Chinese housing market. The sharp drop in new home sales could lead to an increase in developer defaults. A steep decline in the government revenues, waning demand for building materials and lower wages. All this is bad for China, global demand, and predicts a deeper recession for major economies. At the same time, the US dollar, even though it does not look like a surefire shelter, definitely wins against the euro and the pound. During the day, all the peers in the basket seem to have recognized this and awakening by an average of 0.6% against the US dollar, raising the index to old new highs. The Canadian dollar has been wound down by the stunning greenback's weakness. The USD CAD pace now trading at 1.3479, 0.31% up from yesterday. The intraday corridor is seen between 1.3440 and 1.3510. Apart from the firm greenback, the loonie is hurt by a drop in oil prices on Monday. The 1% plunge came as investors have doubt about a steady recovery in China's economy. Brent crude futures declined by 0.9%, and WTI futures fell by 1%. Crude oil has entered the overbought zone, and the time is ripe for investors to revise their forecast. A flagging economic recovery in China and the US dollar's advance influenced market sentiment. As a result, the loonie's outlook is weak for today. However, it could receive a boost from inflation data tomorrow. The crypto market has been firmly stuck in a range, and popular assets are trading mixed without any light at the end of the tunnel. Bitcoin is opening the week at about 29,350, or 0.15% lower. Top altcoins are trading sluggishly. They are wavering between gains of 0.4% and dips of 0.7%. The only driver in the news environment is the interview by John Reed Stark, a former official of the Securities and Exchange Commission. His interview is now scrutinized by crypto investors. He suggested that the approval of spot Bitcoin ETFs is unlikely after the delay of the ARK Invest application. The Commission could postpone its decision until 2024, and he also anticipates a possible change in the cryptocurrency rules after the US presidential election, especially if Republican government comes to power. Speaking of the intraday outlook for Bitcoin, the token will hardly exit its trading range from $29,200 and $29,600. If the miracle happens and the price goes beyond the borders, it could either decline to $28,800 or climb to the landmark level of $30,000. Keep track of all market developments on the InstaForex TV channel. Your feedback is highly appreciated. See you online tomorrow.